This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Michael Nogen, managing partner at Overton Venture Capital. Overton Venture Capital is an early-stage venture capital firm investing in transformative brands and services. They partner with ambitious entrepreneurs who are meeting the challenges and opportunities of today's rapidly evolving consumer landscape. Michael, thank you for joining us.
Paul, I'm very excited to be here. Thank you.
Great. So tell us more about your background. What did you do before you started investing in early-stage companies?
Sure. Well, I've definitely taken a more circuitous path to early-stage investing. I started first of all, I grew up in Texas, but been in New York for almost 20 years now. I started my career at a large bank, GE Capital, so that brought me to New York. But I've always been very entrepreneurial minded, and similar to probably a lot of people, especially males, I saw an opportunity to launch a maternity brand, and that actually. Running that company, launched that business in 2004. And that was the first time I was really introduced to business planning, marketing, hiring, and, learning the ins and outs. But most importantly, the importance of giving the customer what the customer wants. After exiting the business, I completed my MBA at NYU. And then I went to work for a boutique management consulting firm called Salmon, which is really focused on retail and consumer. And went in-house to one of my clients, the Gap brand. I was head of global strategy at the Gap, and then followed by head of finance and strategy at 100 Flowers. So I've had my background, for investing has really been a former entrepreneur. I've been but during the time that I was at Gap and then 100 Flowers, I started giving back, getting involved in the early stage startup world in New York, volunteering and being a mentor at a few different tech accelerators. And, by mentoring, I really thought, do I want to start another venture? Do I want to invest? And during that time, coincidentally, I caught up with a friend of mine who became my general partner, Carrie Miller, and we were getting together and thinking about, we both were thinking about approaching angel investing, but what would happen if we created a fund or more of an institutional fund that was around operational investing, being active investors at a very early stage, because both of us, loved building companies and how can we actually be able to help mission aligned founders. So that was my entry point into early stage investing, and this was back in 2019 now.
Great. So what excites you right now?
That's a trick question because there's so much happening. Overton, we focus on this intersection of physical and digital world. All these ways to leverage technology to reduce friction. So if we think about better ways for e-commerce, last mile delivery, smarter automated workflows in business. Another area that is particularly interesting is this importance of community. So a lot of people talk about Gen Z or underserved markets like Latinx, baby boomers. And then obviously with technology is this opportunity to hyper-personalize. So we are particularly interested in curated marketplaces. But pretty much innovation's happening everywhere very, very quickly. Some sectors are a lot slower to adopt, and that's kind of where we see particular opportunities. In terms of excitement, it's a great time to be an entrepreneur, but it's an equally exciting time to be an investor.
Great. So you see a lot of startups and a lot of investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that check?
I would say that the number one piece of advice I would give any person thinking about investing in a startup is really to get to know the team. We spend a lot of time getting to know the startup team. You hear this mantra that it's all about the people. It's people, people, people. Sometimes the best ideas are worthless, right? If this team isn't able to execute. So we need to know who we're investing in. Why are they the right people? Will they attract best-in-class talent? VC investing is it's a long game, and it's all about relationships, and relationships are very important. And for an investor, particularly in an early stage, it's really important to founders how you can be helpful. So whether or not it's in addition to your check, sales intros, functional expertise, et cetera. So, that's one piece of advice, getting to know the team. The second piece of advice I would give to anyone thinking about investing in startups is to do homework, really know the terrain. I don't recommend anyone invest in a sector just because it's hot. Knowing how startups compare to the competition, are they early? Are they late to the market? Are they so early that they'll need to do a lot of market education? So really don't necessarily follow the herd mentality just because it's hot. Really get to know the terrain. And then, I would say that those are probably the two most important pieces of advice I would give.
Great. And then on the other side of that table, what's your advice for people running? What do you tell that CEO to do before they go out to raise funding?
Number one, I would tell any person that running a startup that fundraising is actually a core competency for early stage founders. And so it's super important to really know your story and know your story unpacked. When it comes to messaging, what the vision, what your startup company does, you as a founder really need to be able to explain the problem that your startup is solving so simply that even your mother could understand it. Treat any sort of fundraise the same level of care, thought, and attention as you would, any other aspect of your business. Fundraising is super core. Also, those that are looking for funding, today there are so many more options for funding beyond what would traditionally have been in venture capital. If you think about, debt, convertible notes, or equity, today we have safes. There's obviously alternative financing vehicles. So technology, there's a lot of revenue-based financing. So if I think about the clear banks of the world, so again, thinking about the changes in the landscape, every sector is being disrupted, and now that there are a lot more options for founders to finance their business versus just doing convertible note or equity.
Great. Well, let's talk about the state of startup investing. How do you see the industry evolving from here?
I think your previous guests have also acknowledged, but there's so much capital across all stages. Again, I think it's an exciting time to be an entrepreneur. In terms of the industry evolving, a lot of the trends that when I launched Overton back in 2019, a lot of these mega trends that we were focused on, so this quote unquote evolving consumer, we had been looking at the macro landscape, and now COVID pretty much accelerated a lot of these key trends that we were focused on. So, when we were doing our original fundraise for our own funds, when we talked about the gig economy and this hybrid work, in office, elsewhere, remote work, it didn't seem to resonate as much as it would today. So, the industry in and of itself, state of investing, there's a lot of capital. There's just so much stuff going on, and I think it's a great time to be an investor as well as an entrepreneur.
And what do you think is the biggest change we'll see in the next 12 to 24 months?
There's certainly a lot of interest in diversity and inclusion. So, the D&I, there's a lot of chatter. For us as a fund, as an early stage fund, we believe the importance of diverse teams. I've seen it both in the corporate world and I just think it's leads to success. We're not an impact fund, but there is a lot of just interest in diversity and inclusion for funding and funding emerging managers, et cetera. It's probably more chatter than actual, right? So I think less than 2% of funding goes to, startup founders of color, for example. I think that there's going to be a lot more opportunity there. So it's not so much, a white person's game anymore. And I think you're going to start seeing a lot more impact type investing.
Great. I agree. I think we'll see a lot of more investing into the impact space, DEI world, and it's going to become a must do, not a nice to have in the near future. So we'll see how that plays out. Mm-hmm. Let's talk about your investment thesis for your fund. What exactly is it, and what's your criteria for investing in startups?
So as you mentioned in the intro, we focus on early stage, primarily seed. I would say that, we pretty much have a consistent 4-part approach to investing. The first is, we're a generalist fund and we look for sectors with massive market opportunities. And those kind of key buckets are next gen commerce, ed tech, so education tech, the consumerization of health, and future of work. That's the first part. So massive market opportunity. The second approach, or the second piece, is really about finding the best people with the highest passion for their business. And, we look for founders that, demonstrate, deep commitment to the problem. So, would this founder keep going, even if funding never appeared? So would this funder break down walls? Like, those are the best founders that we look for. For us, we go as early as possible. So as I mentioned, we focus on the seed round. We like to be the first institutional check. We typically co-invest with another institution. For us, going as early as possible, a lot of these companies may or may not have revenue. So for us, we like to see some traction, even the ones without revenue. And what does that mean? Fundamentally, do users love the product? And the product could be a product or service so much that they, will tell other people about it. That's how much they love it, that this will, provide a 10x value to them. So we've actually invested in of our 15 portfolio companies to date, 2 were pre-revenue startups. But in both cases, they had customers that demonstrated, without revenue, they had, pilots, but there was demonstrable paths to, monetization. So we gained the confidence in their business models that they would have strong customer traction, reducing our investment risk. And then the fourth piece of our approach is really, which is special to Overton, is we play an active, hands-on role. So, how can we potentially, amplify growth and success? So one of the things that is unique to our fund, so I talked about my co-general partner, Carrie, but we have a bench of now 22 operating partners, and these are functional experts. And for every investment that we make, every diligence, we ask a lot of questions, a lot of how questions. We really get to know the business. We go deep. We look for those opportunities where we can maximize their success. And we will only invest if we can add accretive value. So for example, if a company is, in their supply chain, we have an operating partner who is an operational supply chain guru, or if it's growth hacking, or if it's data science, how to be more predictive. So we really look for ways that we can, provide that check plus, because it's so important for seed stage. These are early companies, and our job is really to get them to those, a Series A funding milestone. Those are the kind of our approach to investing.
And can you talk about one or two startups, perhaps portfolios that fit that thesis?
Sure. As I mentioned, for us to make an investment, it really needs to be at the intersection of having both a great product as well as a management team that can scale the business. So I talked about next gen commerce. So what does that mean? More specifically, we're very interested in live and social commerce. So, there's this evolution of commerce becoming, how people shop and socialize online. One of our portfolio companies is called Paloma. And what Paloma does is they help e-commerce businesses sell directly to consumers using Facebook or Instagram Messenger. So they have this automated chat-based personal shopping conversation. And what ends up happening is that you see a much higher interaction between brands and consumers. So in terms of a propensity to purchase. So it's the social commerce aspect. Another, I mentioned consumerization of health. One of the big trends that we look at, aging population. We know that boomers, make up over 20% of the US population. Older adults are, going to outnumber younger adults. One of our portfolio companies is called JoyLux. And what JoyLux is doing is they're disrupting this enormous yet underserved intimate health market for menopausal women. And so what they do is they offer high-tech devices, digital tools, consumables to address menopausal-related health concerns. So, we're looking for niche but large market opportunities that might be unserved or untapped.
Great. Well, there's a lot of challenges out there for both startup and investor. What are the main challenges you see your startups facing in today's market?
I think I started off our discussion around the importance of team, and it's about the people. Well, I would say that the hiring strategy and really right sizing the team early on. So I'm hearing from, we're very active with our, 15 portfolio companies, and finding the right talent is a challenge, and knowing when to move from a contractor, a 1099 to a full-time also is not always clear. So being able to finding those product engineers, especially when they're so in demand and can't always pay for the best talent, and, go to market challenges. I think, at early stage, they're still trying to figure out their channel distribution or marketing strategies. What's the most effective way to communicate? Are they buying customers or is it organic? And I would say that probably the third kind of key challenge that I'm seeing, and just across the board, is how these startups, stay focused and just, continue with that North Star, being able to actually track the milestones, having KPIs, and at the end of the day, really listening to their customer.
Great. And then on the other side of that table, what's the challenge investors face in today's market?
When you're looking to invest in a company, does the company have a game plan? Does the founding team have a game plan? Do the unit economics make sense? Are you basically investing in growth, but at the expense of the bottom line? Is there a short-term path to profitability? That's one thing that we look for any of our businesses. The unit economics really have to make sense. And again, as an early stage investor, it's our job is to get our portfolio companies to the next round of financing. So it's really important to be clear of what are those milestones and how can you as an investor, in addition to your capital check, but what can you do to be helpful? So intros to other funds or other investors or sales introductions. And then actually one last challenge that I think and I'm seeing a lot now, and I'm sure you are as well, Hall, is this valuation frothiness. Because there's so much capital and there's no longer any lane clarity between who's a VC, whether or not it's a venture capital or private equity, or, the fact that Tiger Global is this hedge fund is now the most active investor in early stage early stage funding is crazy. So with this frothiness and companies almost raising too much money, as an investor, be on the lookout for potential down rounds. So those were probably the three challenges that I would be on the lookout as an investor.
Great. Well, you've mentioned several sectors that you play in, but if you had to pick one or two out of everything in the market today, what would you think are really good opportunities for investors to pursue at this moment?
Number one, I mentioned just the aging population. So I'm very interested in aging in place. Really look for platforms around advanced care, end of life planning. I think there's a huge opportunity there. Also, digital collectibles, not necessarily the NFTs when we're thinking about non-fungible tokens, but combining this social shopping platforms along with marketplaces. So I'm one startup that we're not invested in, but I think it's a great business model. It's called Loop Tech. And what that is, it's a shopping platform, live stream shopping platform and marketplace for, sports card collectors to basically come together with shared interests. So it's a curated marketplace. You're able to, exchange digital cards and so forth, and really think that there's a huge opportunity in digital collectibles. So those are kind of two subsectors I'm particularly interested in.
Cool. Well, in the last minutes that we have here, what else should we cover that we haven't?
You asked some pretty good questions. I think at the end of the day, my advice is, at least one of the things that I love about early stage investing is it's about giving back, and it's a lot of good camaraderie. So being able to not only give back and being sharing resources and deal flow, I found that it's a very collaborative space.
So how best for listeners to get back in touch with you?
So I'm definitely open to intros. The best way is probably to go to our website, overtonvc.com, or they can shoot me an email at michael@overtonvc.com.
Great. We'll include those in the show notes. Want to thank you for joining us today and hope to have you back for a follow-up soon.
Paul, thank you so much for having me. Had a good time chatting with you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.